Hey guys, welcome back to the channel. So in this video, I want to go over an investment tool that will help you grow your money with inflation. As many of you know, interest rates are near 0% right now, with the national average for savings accounts at 0.06%, and even high yield savings accounts paying less than 0.5% on average. So for people that want to gain a consistent return on their investment, doing it in a savings account is extremely difficult right now. So most people would prefer to put their money in the stock market. However, there are others that don't want to take on that risk because putting money in the market does entail risk. So what is a way that you can actually grow your money with less risk? Well, that would be through Ibonds. So what is an Ibond? An Ibond is a treasury that is basically, issued by the government. And it's a savings bond that earns interest based on two combining factors. It's based on fixed rate and inflation rate. So right now, if the fixed rate is near 0%, you have the inflation rate that is also put into the equation, and inflation rate right now being 7.12%, and that is derived from the CPI, the Consumer Price Index. So as inflation rate continues to rise, the interest rate that you'll be receiving on your bond also continues to rise. So it's a way kind of to hedge against inflation that you'll be able to gain a consistent return as inflation goes up. Your return on investment will also go up. Now, of course, if inflation comes down, and the fixed rate goes up, it kind of levels out, so it's always going to be consistent with the economic environment that we're in. So as I mentioned, the fixed rate will stay the same for the life of the bond, and inflation rate is set twice a year. So every 6 months, the inflation rate is recalculated based on the Consumer Price Index, the CPI. And an I-bond will earn interest for 30 years unless you cash it out. So you can always cash it out, preferably, after 5 years. But you can cash it out anytime after 1 year, and I'll go more into detail about that in a little while here. But again, if you cash them out before 5 years, the only downside to that is that you're going to lose the previous 3 months of interest. So assuming you were to cash your bond out at 21 months, you'd basically get the interest up to 18 months. You'd forfeit the last 3 months of interest if you do it before the 5 years. So what are the advantages and disadvantages of an I-bond? Well, the advantages is it's a safe and a conservative investment. You're not going to see fluctuations like if you had your money in the market. It has a minimum purchase of $25. That's all you need to get started with an I-bond, just $25. And you can actually put up to $10,000 per calendar year. And it's a benefit from inflation. You will benefit from inflation, as I mentioned. As inflation continues to rise, the interest rate on your bond will continue to rise as well, which will result in a higher return on your investment. Now, what are the disadvantages to an I-bond? Well, you have to hold it for at least 12 months. So when you buy a bond, it has to be held for at least 12 months. After 12 months, you can cash out your bond. However, if you do it before that 5-year time span, then you will forfeit the last 3 months of interest. And also, it is a slow return on your investment, and that's another disadvantage. If you're used to getting crazy returns like you do in the market right now with record highs that we've been hitting all year long, you're not going to get that get rich overnight kind of thing. That's not going to happen. It's a slow return on your investment, so it's a steady over time return, and that's all it is. It's kind of like an alternative to a savings account. You're building over time, but it will add up, especially with 7%. Not many savings account in a normal environment would even pay you close to 7% interest. Now, what are the tax implications? Well, one, it is not taxable at the state and local level, but at the federal level it is. But it is not taxable if you do use that money for qualified educational expenses. And on the website, you will find more details on what basically qualifies as an educational expense. Now, the ability to pay taxes on interest, you can do it in one of two ways. You can either pay the interest on the interest, you can pay the taxes on the interest you receive at the end of the year of each calendar year, or you can just do it at one lump sum when you just sell your bond. So for instance, if you receive interest this year, come this tax season in 2022, you can pay taxes on the interest you received for this entire year of 2021, or you can bypass that and just wait until you sell your bond 20-30 years from now, and then just pay the interest when you just withdraw or sell your bond at that time. So you have two options: either pay it year by year, or just at once when you cash out in a lump sum. Now, as I mentioned, the minimum purchase, if you do it electronically, is $25. If you do it by paper, it's $50. And the maximum purchase electronically is $10,000 per calendar year that you're allowed to invest. In a Roth IRA right now, I believe it's $6,000. So this gives you, at least $4,000 more if you'd like to invest if you do it electronically. Paper is $5,000 per year. and the interest is compounded semi-annually. And right now, currently, if you do get and purchase an Ibond from as of November, which was last month, until April of 2022 of next year, you will be receiving 7.12% interest on this Ibond. Now, keep in mind that, again, every 6 months, this number, this 7.12%, will get recalculated based on the inflation rate that we, are currently, what the inflation rate currently is at, and of course the fixed rate if it goes up or down. But right now, like I said, near 0%, the inflation rate is more than likely going to impact, be the major factor in the two components of this. So as I said, it'll get readjusted, and that 7.12 could go higher, it could go lower, but it's going to stay within that range. And if inflation continues to surge higher and higher, that interest rate will obviously go higher and higher. So you'll benefit from inflation to an extent by obviously getting a higher return on your investment. So hopefully y'all found this helpful. It's just another investment tool to diversify, to kind of hedge yourself against inflation and get a return. I've always believed just having money sitting around is losing purchasing power day by day, especially in this economic environment that we're in right now with inflation surging. So in order to capitalize on that, getting an Ibond would obviously help with your return on investment. It sure beats out putting money in a savings account right now. And you can obviously have an Ibond set up for someone else as a child, or create it as a trust fund. There are several different opportunities and different methods you can go about this. I'm going to put the link in the description if you're interested in purchasing an Ibond. It's not an affiliate link. I don't make money off of this. This is just something I wanted to pass on that I find beneficial, especially in this economic environment. Like I said, with inflation skyrocketing, interest rates don't look like they're going to be raised anytime soon. This could be something that obviously you can definitely benefit from with what we got going on right now. Like I said, with interest rates near zero and inflation rate being at 7.12%, that is a decent return on your money, and a conservative return that is risk-free and less risk than having your money or all of your money in the market. And it's a good way of diversifying. So guys, I hope you all found this helpful. If you have any comments, drop them down in the comment section. Hit the like button, subscribe to the channel, and I will catch you on the next one.